Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about the best mortgage rates this week. Where are they? Where should you be looking? And what expectations do we have for mortgage rates over the next few days? Now, mortgage rates have been a very popular topic on this channel. And don't I know it, when we get a rate that goes up or down, the comments are alive with stuff saying, you said they were up yesterday, now you're saying they're down. And that is the volatility of the market. It's been like that for a year, but it isn't always like this. And it wasn't always like this. 2 years ago, when we started the channel, rates were much more stable. The time between rate increases or decreases was months. Now, sometimes it can be weeks or days, or even we've had cases where Barclays has increased their rates twice or decreased twice in 24 hours. So this is something that's moving a lot. Now, why is that happening? Well, there's still uncertainty in the markets. We've got Labour in power here in the UK, and their budget hasn't gone well. In fact, we can already see that in the jobs data that we had out this week. Unemployment is going up, which is not a great sign. The expectations were the UK economy was going to go into a recession, but they've just slightly avoided that with some growth in the data that we saw. It was 0.1% growth, which is not really that great. But we've also got the uncertainty on Donald Trump. He's in power now, so we know that, but he could be putting tariffs on all of Europe. I've seen him say that in multiple interviews over the last few days, and that could cause a trade war. Now, that will impact the UK economy. It could mean that the pound weakens significantly, and if that happens, everything that we import, which is a lot, could get more expensive and could push some more inflation through into the economy. So there's a lot to take into account, and that's why we've got this period of uncertainty. But what will happen is once the tariffs are launched, if they happen or not, after a few weeks or months, we'll start seeing the impact on that stuff. And that will give us the certainty, and then mortgages will be priced more effectively. So what are we looking at on average on deals at the moment? So the average 2-year deal at the moment with all lenders is 5.06%, and the 5-year deal is 5.09%. Now, these are pretty close. We did have a period last year where lenders were expecting rates to come down at a much faster rate, and so they were giving you a better deal on a 5-year deal than a 2-year deal. Now the rates are pretty much equal. You're not going to see a massive difference in your monthly payment on either of those. The expectations is still the Bank of England will cut 4 times this year, and the Americans will cut 2 times. We've got 2 cuts in hand, as in we are 0.5% higher than the Americans on their bank rate, which means we could do 0.25% cuts and still be equal with them. So if they cut twice and then we cut 2 more times after that, we will still be equal. So there's a good probability of that. So let's look at lenders and who's got what deals going on. So first, I want to talk about HSBC. They have put rates up this year, as have quite a few lenders, and that's because the swap rate, the rate that they borrow at, increased. Now, they've got a 2-year deal at 4.3%, which is definitely worth checking out, and their 5-year deal is cheaper, 4.19%. So they're trying to steer you to that 5-year deal. So that shows that they probably believe that over a period of time, rates are going to drop. Maybe not immediately, but in that 5-year period, they feel they're going to drop, so they want to tie you in for longer. That gives you certainty, though, as well. NatWest, let's have a look at what they're doing. Now, with NatWest, this is a very popular comment, is when we talk about a rate at NatWest, people go onto the NatWest website and they say, I can't see that rate, or I can't see it on the comparison sites. Sometimes you need to go through a broker with some of these lenders to get the best deal. That's important to note. And I would always suggest that you use a broker because they will negotiate for you. They will get the hard deals over the line. Every single deal I use, if it's easy or hard, I always use a broker. And some of the deals that I thought would be easy get to a stumbling block and the broker always gets it sorted, so it works for me. So NatWest have a rate of 4.27% on 2 years, that's their best rate, and 4.07% on a 5-year deal. Again, they're trying to steer you towards that 5-year deal. Santander, let's have a look how they're doing. Haven't heard much from them this year. They were quite active at the end of last year. Santander have their 2-year deal at 4.33%, and they have their 5-year deal at 4.18%. So again, they're trying to steer you that way. Barclays, let's have a look. Barclays has been in the news this week. They've been a lender that's increased their rates this week, and they've done it twice, I think, already this year, once this week. So Barclays, they have their 2-year deal is quite expensive for them. 4.43% is their best 2-year deal. And the 5-year deal is 4.31%. So it's interesting, they've put their rates up. They're more expensive than the others at the moment. And last year, when we were doing weekly roundups on what's happening to mortgage rates, Barclays were often one of the cheapest, and that made them really aggressive and getting business. So some of you say they're not particularly great with buy-to-lets. I've never had a buy-to-let with Barclays, so I don't have any experience, but you've said in comments that they're difficult. They have so much strict criteria. So if you are a buy-to-let landlord, maybe avoid them. Nationwide have been really aggressive on mortgages last year. I'll explain in a second. So 4.34% is their 2-year deal, and 4.19% is their 5-year deal. Now, Nationwide have other brands underneath. I think they own Virgin Money now, and they own The Mortgage Works. So if you ever look on a comparison site for a buy-to-let mortgage and you see a company called The Mortgage Works and you're like, who's that? Never heard of them? That's it, right? And so they are one of the biggest lenders in the country now. They give us monthly house price data as well. And they're really normally quite aggressive. So far, NatWest is the best here, isn't it? So last one is Halifax. So with the Halifax, you've got a 4.23% deal and a 4.12% on the 5-year. So NatWest seems like it wins on the 5-year deal, and Halifax are the cheapest on the 2-year deal. Now, what would I do if I was borrowing from one of these lenders? If one of these was my own lender and I was already with them, HSBC, for example, for the sake of a few percentage points, I would probably stick with the same lender, because if you move lender, the costs go up significantly. You've got to pay for valuations, you've got to pay for solicitors and stuff like that. So it's easier to transfer internal with a lender. They already know your payment history, they already know the value of the property. They probably won't even send a valuation officer round to the property, so it will save time and money. With the Mortgage Works, for example, which is a buy-to-let lender, with them, I'm always able to just switch online. It takes about 5 minutes, and it's the quickest process I've seen in the market. So that's a good option to have with that kind of lender as well. Now, swap rates, which is the rate that these guys borrow at, that's been volatile over the last few weeks. And so I do think that you could see some lenders increasing rates over the next few weeks again. Shorter term, I think by the spring, I think you should start to see some mortgage rate cuts. The Bank of England is likely to have cut the base rate by then. The economy data probably won't look so great if we've got more unemployment, which a lot of people are expecting. And so that will put pressure on the Bank of England to cut. That hopefully will drop the swap rate which these guys borrow at, and the market, I believe, will slow down significantly in April, May and June because stamp duty goes up on the 1st of April. So there's tons of people that want to get deals done today. They want to get deals done this month. So the market is quite busy. So these lenders don't have to be as competitive to get your business, but they will have to be competitive in April when the market slows down. Let me know your thoughts, questions, opinions or observations in the comments, or even if it's just to say hi. I personally do reply to every single comment on the channel. Do smash like, do subscribe, and check out all the other content on my channel, including this video right here.